Okay, everybody. Thanks for checking in. This is our S&P 500 sector spiders preview for the week coming up. A couple interesting things setting up because we're trading right up an important level in the S&P or the SPYs, which I'm watching are at 280, but the S&P 500 is at 2080. So let's see what's going on. Okay, so I believe that in financial markets, prices are always doing one of three things. They're either going up, going down, or staying the same, right? That makes sense. So if you learn where these important levels are and what the trends are, I believe that it can really help pretty much almost any investment style, certainly the styles of most of the people that are my clients. So we have to recognize that there are certain price levels that are more significant than others with regards to the amount of supply that and demand that exists in them. And unfortunately, this technical analysis methodology has kind of a bad name and isn't very widely respected in the institutional world because so much of what you see is really just garbage with things like Elliott waves and GAN theory, stuff that really belongs in the realm of Bigfoot and UFOs. That being said, most of the fundamental research is garbage too, but people still, believe in that for some reason. I remember when oil was trading at 150 and all the oil analysts over at Goldman Sachs were saying, oh, it's going to 200, it's going to 200, it's going to 200. And then, then it completely collapsed after that. So anyway, whatever. That's just a cultural thing. But over in Asia and Japan and India, from what I understand, technical analysis is widely accepted. And I guess it's just because, the original first technicians were rice farmers trading futures back in Japan in the 16 and 1700s. But anyway, I don't know, maybe because they value education more, they believe in this stuff, or the part of it that's credible at any rate. Oh, I'm sorry. All right. So anyway, I suspect we're going to see some more selling pressure because you see this reversal pattern here. I'm sure in the candlestick world, this has a name. And one time I probably knew what it was, but I don't remember. But it's really not. This is another one of these things that is really, there's something to it, right? And what is this pattern here, this 3-day pattern? Well, you can see on Wednesday, it opened here and closed here. So there's your open, there's your close. So the buyers are in control, right? So demand is overpowering supply. This day, it becomes kind of neutralized, which means the forces have equalized. And this day, it opens here and closes here. So now the sellers are completely in control. So in this 3-day period, we've seen that these forces of supply have overcome the forces of demand. That's why I suspect we're going to see some selling pressure on Monday or Tuesday. Nothing dramatic because this is a pretty important level, but I'm pretty sure it's going to get tested again. And you can see that there's going to be support here because there was resistance here, and resistance here, and resistance back here. If this level breaks, we're probably going to have a pretty quick and meaningful sell-off. I would say the first levels of supply might be right in here at the top of this range because it was the top here. So that's probably around 272, 273. And then if it goes beyond that, this 268 level was the low here and the low here. So there's probably going to be some more support there. So this was where the big sell-off came on Friday. You can see the XLK just smashed right through the 7250 level, which was the top here and the range here. So I should suspect on Monday we're going to be testing the 71 level. If this breaks, it's going to be down to 70. Isn't it fun how this stuff just goes by even dollars? This really didn't happen before there was these spiders. If you think about it, it's really amazing considering how many millions and millions and millions of shares are traded and how many hundreds of thousands, if not millions of parties are involved, and yet they find these pretty much these exact levels. So anyway, well, this level here is $1.50 below 70. This 68.50 level, and here was the bottom of the range here and the bottom of the range here. So, it could go like a stair. It's like ba-boom, ba-boom, ba-boom. So that's a look at tech. So this is really what's important. I think this next thing is very important to watch. These are the financials. And you can see on Friday, even though the market was down, they were up a tiny bit. So these things have trended upwards, hitting an area that was resistance here, and resistance here. Now, if this uptrend line breaks and these things start to go down, and the tech sector is still going down, I mean, that's 40% of the S&P right there. So we could get a meaningful sell-off over the next couple of weeks. So I would say this is really probably the kind of the most important thing to watch is how the financial sector handles this, testing this trend and testing this resistance level. Again, here's a chart I like to point out to people that don't believe in charts. You can see here back that in 2007, the market basically turned over at the exact same level that it did here, when the market topped recently. So that's a pretty amazing coincidence that 11 years later, these things could turn over at the exact same valuations when you consider how many different individual securities are in the basket that makes up the index that this XLF corresponds to. But it does really show you that markets do have long-term memories, and there are definitely supply and demand dynamics that are going on. And if you study them and understand them, it can certainly help you make money. Healthcare also had a little bit of, that same kind of reversion pattern. And remember, the market opens here, buyers drive it up. Next day on Thursday, buyers and sellers become equalized. Friday, sellers overpower the buyers and send it down. So that's why that is a bullish symbol. And it's probably got some kind of like cool Japanese name, which I knew at one point. But it's really not important to know what the names are. You just have to understand what is going on in the patterns. I mean, like if you look at back here, this is probably some kind of candlestick defined pattern with a name, because you can see here the market opened here, the sellers were in control. Sellers drove it all the way down to here on the following day, but by the end of the day, the buyers were back in control, and the blue indicates that it actually closed up on the day. So this, like I said, this I'm sure has a candlestick name, and I'm going to do a trading lesson on candlesticks pretty soon, so look for that. But the idea, like I said, is just to look at what this shows you. What does this show you here? Okay, sellers are in control. The thing opens at the high of the day, closes at the low of the day. Opens at the high of the day, closes at the low of the day. Okay, next day opens at the low of the day, closes at the high of the day. So that is a signal that the supply has kind of run out and the forces of demand have overtaken them. And then, sure enough, you get the uptrend. I mean, I know it's easy to say in hindsight, but if you can understand what these patterns mean as opposed to just mindlessly remembering their names, it's certainly going to help your trading abilities. Consumer discretionaries really kind of just still consolidating around these all-time high levels. Kind of a big move here on Friday, but it's still within this recent trend. It's probably going to be some support at 110. It goes down, and more support down to 107, because you can see that was resistance here, and it's also the level from which this most recent rally started. If this breaks, I think we could get a sell-off all the way down to the 98 or 99 level. So, I mean, that's still a longer term or intermediate term, probably a month or two out, but it's just something to watch. Okay, this industrials are painting an interesting picture, because you can see how the 71 level was important here, here, and here. So once it got here, it got oversold and broke its downtrend, and it's been rallying. So now it's getting up to where it's testing the 7650 level. You can see that was the high here, that was the high here, and that was the high here. So there's another thing to watch. I mean, this is a 10% of the S&P. So I guess if this coincides with the financials breaking, obviously that's another real bearish symbol. And this most corresponds to the Dow Jones, which is what most retail investors watch. So if they see this going down, or well, whatever, it's just not good. It's just something to watch. I don't really know what I'm trying to say, but if you have this negative action here, and then you have this negative action in financials at the same time, and they each break, that could be a catalyst to a fast and, not a market crash, but but a reasonable sell-off, maybe a 5 or 10% sell-off. All right, so consumer staples is kind of interesting. Again, this is something else that's testing resistance. You can see that this 53.50 level is being tested here, slightly overbought. This was the top here in April, and the reason why it was the top is because there was support here in February and March. So as resistance becomes support, support becomes resistance, as we all know. So just another thing to keep an eye on. I like pointing this out too, kind of like the long-term chart in the financials, how certain levels are important. This 50 level is important, right? It was where the recent lows were. It was pretty much the exact low last September, and then it was pretty much the top of the range throughout all of 2015. So a nice round level at 50 is something to watch. I mean, this is longer term, but if this thing breaks, we could get a really big sell-off here. Energy is trading back in the middle of its range. 74 has been support because it was resistance here. 78's been the top. It was the top back here and early in the year. So this is just trading in the middle. I have this on my radar screen for a possible short. If this 74 level breaks, you can see there's really not too much resistance there, which means there won't be support over here, right? So if this 74 level breaks, we could get down to the 68 level pretty quick. So I would probably say I would have my short as a sell stop at maybe 73, with my buy stop to cover at a loss at 74, and then my target at say 69. So that gives me like 3 or 4 points of potential profit, 1 point of potential loss. And you have to remember, when you enter a position, it's more, in my philosophy and experience, it's more important to know where you're going to sell it than what you're going to buy. In other words, you should not take a position, a long position, unless you know what your sell target is, unless you know where your stop out is. That's, in my opinion, the most important rule of all of investing, or of this kind of trading investing. These longer term value guys, they're not going to have stop out prices, but that's not what we do here. Another interesting example of these long term levels, and this is why 78 is important. See, that's the recent top. That's the top early in the year, and this is back in late 2016. So obviously, if this thing gets back up to 78, there's going to be considerable resistance there to have to break through if it does, in fact, continue to rally. Materials, there's been support at 58 recently. Trading still, have rallied a few points, but they're back in the range that they've been in. It's kind of a boring sector. And here's utilities. And you can see they've just been consolidating after breaking this uptrend line when there was all the hoopla about rising interest rates last month, or 2 months ago, I guess. All right, so anyway, so that's it. Again, keep an eye on how the SPYs handle the 280 level. Watch the industrials and the financials for potential trend break, because they're each testing resistance. And then just keep an eye on the XLKs. And when those things find some support, if they do, that could be a signal that the larger, broader markets are kind of settling down. But it looks to me at this point that the path of least resistance, at least in the short term, is down. So we'll see what happens. Thanks for checking in, and we'll speak next week.